So you are interested in buying a franchise. A lot of times you'll hear the letters FDD thrown around. What is the franchise disclosure document and what does it contain? In this quick video, I will talk about what a franchise disclosure document is and just give you a quick overview of the different items that are in the document. The franchise disclosure document is a legal disclosure document that must be provided to you as part of the pre-sale due diligence process. However, we always recommend having a franchise attorney review your franchise agreement as well as the franchise disclosure document before you make a decision. Item 1 is going to contain the franchisor, any parents, predecessors, and affiliates. This will be a few paragraphs regarding the business, maybe the date of incorporation, and if it's controlled by other entities. It's also going to outline the principal place of business, formal operating name, and other details. Item 2 is business experience. This part outlines the people involved in the franchise. It'll also highlight their backgrounds if they came from other brands. It's always a good idea to do a little bit of research on the leadership team. Item 3 is litigation. Has the franchise sued anyone? Have they been sued? The bigger the brand, the more lawsuits you tend to see. It's just the nature of franchising. Item 4 is bankruptcy. This will list if the brand has experienced any bankruptcy or any principals involved in the sales process. Item 5 goes through initial fees. You should already have outlined this with the brand on their unit economics call. Item 6 will go into other fees, which is important because it might include things like advertising, technology fees, software fees, and things that may not have been brought up on your unit economics call. Item 7 is your estimated initial investment. This is another extremely important item when you are doing your pro forma. You definitely want to take the time to read through this. It would be outlined in a table or chart, so it's pretty simple to look at. Item 8 is restrictions on sources of products and services. Certain brands have certain restrictions. This is a good one to look at because you can also identify if the brand is making money off the goods that they are selling you and if you are buying them at a fair price. So item 9 is the franchisee's obligations. This is important because it's going to cover a lot of the information that you'll see in your franchise agreement. Are there customer service obligations, marketing obligations? It's always good to look this over. And again, your franchise attorney should be reviewing the entire document with you and walking you through each of these. Item 10 is financing. Does the brand offer financing? Some do, some don't. Most people typically just go the SBA route or utilize one of our franchise financing partners. Item 11. Franchisor's assistance, advertising, computer systems, and training. This is going to outline the type of the support that the brand is giving you. Item 12 talks about territory. This is pretty straightforward and also important to see how your territory is created and if it is a protected territory. Item 13 is trademarks. These are the trademarks the company owns. Item 14 is going to include patents, copyrights, and proprietary information. Item 15 is obligation to participate in the actual operations of the franchise business. This is really key if you're looking for something that's more passive. Some franchises require actual owner involvement in the day-to-day business, for example, daycares or senior care. Some of them are really strict when you're dealing with people's loved ones and having you involved in the day-to-day. Typically, your franchise consultant will already know this and not have you go through the process with something that is going to be full owner-operator if you're looking for a semi-absentee type of concept. Item 16 is restrictions on what the franchisee may sell. Obviously, you can't open up a McDonald's and put Bob's Burger on the menu. This is pretty straightforward. Franchises are by nature restrictive. This is what keeps them the same for every single location and consistent for the consumers. So item 17 is renewal, termination, transfer, and dispute resolution. This will outline the term of your agreement, also if there are any costs to renew or extend the agreement, and if there is any termination or non-renewal. Item 18 is public figures. This will highlight whether the franchisor uses any public figures or celebrities to promote the franchise. Item 19 is the item that everyone asks about first. This is the financial performance representations. Not every franchise lists their financial performance, and not every franchise publishes it in the same way. But this item will actually outline the gross revenues for other franchisees in the system and can help you determine if it has the potential to meet your financial goals. Item 20 is list of outlets and franchisee information. This is really key because it'll show you in the past 3 years how many franchises were opened, transferred, or closed. We want to see steady growth, and we don't really want to see a lot of retraction, terminations, and closures. So item 21 is financial statements. Item 22 is contracts. And finally, item 23, receipts. As soon as you get the financial disclosure document, you want to acknowledge that you've received it. And that, in short, are the 23 items that are contained in the franchise disclosure document. I highly recommend scheduling a call with your certified franchise consultant to go through the document with you and having them recommend a franchise attorney to review your agreement and disclosure before you sign anything. Thanks for watching.